Hello guys, so we are with the next principle, that is matching principle. It's like making a proper match for your revenue and expenses in the business. What is the match? Match here lies that for the financial year for which you want to know the profits or losses, the same year should be taken for your expenses and the incomes. The incomes and the expenses of the same year should be placed against each other to find out the true net profits of the year, right? So it should not be about that if you are talking about 2024, right? 2023-24, then the expenses of the same year should be charged against the income of the same year. Only then you can get the true value of your profits. That is what matching principle is about. So here full consideration is given to the given year outstanding and pre-received or prepaid, right? So here what we are talking about, let's understand this thing from this example. The salary for the year is rupees 20,000 per month, right? What is the normal expense of the businesses? Every month they have to pay a salary of rupees 20,000. So how many months are there? That is 12. So what should be the expense of the business? 2,40,000. But what is the paid value given to us? 2,20,000. So here in this case, what should be the current year expense? What should be considered to find out your net profit is rupees 2,40,000, which should be treated as expense of the year. The point over here is that 2,40,000 was the expense, but paid value is 2,20,000. That means 20,000 rupees are still payable for salary. They are outstanding. So to calculate the expense of the year, we have to add outstanding to take the total expense. So which value would be considered? That is 2,40,000. So if I say, rather than this point, the first point I am taking this, and the second I solved it for you this. Now the third point if I am taking, for your salary paid, value was rupees 2,58,000. So we are not considering second point. For first and third point, which value we have to take now? Again, here if the salary total amount payable was 2,40,000 and the paid value is 2,58,000, it shows that 18,000 have been paid in advance, right? It has been paid in advance because expense of the year was 240. So we will not consider this 18,000. How this 18 came up, that is the difference of both these values. So what we have to actually consider is 2,40,000 expense of the year. The point highlighted here is the expense or the income of the year is considered, not the paid value or received value. We have just to focus on what should be the expense of the year or what should be the income of the year. We are not considering what actually have been paid or what actually have been received by the business. So that is known as the matching concept. Thank you, Accountancy. Like, share and subscribe. Keep scoring.